Liquidity in international payments can often be invisible and inaccessible, which leads to inefficiencies and risk. RTGS Global have built an international payments infrastructure suited to the digital age, which will enable liquidity management to become more efficient and will dramatically reduce settlement risk.
The world's biggest financial centres have revolutionised retail banking by embracing the latest technologies to transform the customer experience. The challenge now for wholesale markets is matching that momentum by changing the way they operate to make the international payments network fit for purpose in the 21st century.
There's a huge amount of friction in wholesale cross-border payments, whether that be through delay, whether that be through lots of correspondence along the way in transmitting money cross-border, and also the invisibility of liquidity. So banks will enter into transactions paying one side of a transaction in the hope that the other side arrives, and that can be a few days apart. So we've got a very old legacy network that really stitches together the planet for cross-border payments, and it's really time now to modernise that.
This is our commercial bank portal.
At RTGS Global's London offices, a new payments platform developed in partnership with Microsoft is providing the opportunity to revolutionise the movement of money in wholesale markets.
So it's an online web application that allows treasury functions of the bank to actually interact with the network, and they can actually see where liquidity resides across the globe, and they can interact with those other banks.
This peer-to-peer trading capability will enable orders to be raised and settled in real time.
This is my available liquidity balance. I've signed in as the Commercial Bank of Leeds, and I want to source some US dollars, so I don't have any. I want to get those on demand. I know the IBAN that I want to make an ultimate payment to, and I'm going to grab, I need 750,000 USD. You can see I've got an indicative rate come back, and that's come back from my partnering bank that I've identified for US dollars as a Commercial Bank of Seattle. So what I'm going to do is what we call an atomic lock, or lock the transfer. We lock the liquidity at both ends. So what I'm going to do is carry out what we call an atomic settlement. And what that does is actually, across the network, we now settle the balances at both Commercial Bank of Leeds and the Commercial Bank of Seattle. So I now own those $750,000.
So that's it, transaction complete?
Transaction complete, yeah. It takes about 800 milliseconds from some of the largest parts of the globe. So New York to Singapore is where we've benchmarked that.
Using the atomic lock replaces the need for stablecoins, cutting friction in the system, as well as risk, time and cost.
We've been working in collaboration with Microsoft for the last few years to build our global platform. Our platform sits within the Azure global cloud, so all of the safety and soundness and resilience that Microsoft bring to the fore, we run our entire network on the Microsoft Azure cloud. And then we run our ledger within their services. So as banks transact across our network, we maintain our ledger in order to show those transactions. So it's really the advent of new technology that's enabled us to bring together the globe to enable this to happen in milliseconds.
Simplifying wholesale transactions also opens up opportunities for developing new products and services. Streamlining processes also reduces risk and has the potential to make markets more sustainable.
There's been a lot of research in this space by the G20 over the last couple of years. The Financial Stability Board have pulled together a plan, a call to arms, if you like, to modernise, improve and de-risk the cross-border system, let's say. And RTGS Global, we're looking at bringing a solution to the market that we think enables all of those risks to go away.
A point-to-point bilateral network, improving both visibility and accessibility across liquidity markets.
We're taking all of the aspects of what works today, payment versus payment. We're taking central bank money, so using reserves on our network that are supported by central bank funds, and also the adherence to the principles for financial market infrastructures, the PFMI, using those principles to build a safe, solid, resilient framework around all of that, but bring in some innovation to it. So bring in new technology, enabling instant peer-to-peer settlement, but it's preserving all of the things that we hold dearly in financial services today.